Now, welcome to accounting class, and today we're going to look at income statement. So we want to look how to prepare income statement, especially of a sole trader. Income statement of a sole trader is easy, especially as it pertains personal examination. Now, the first thing is the title. Come up with the title because it contains marks as it pertains the title. So let us use Mr. Kamau. Mr. Kamau, income statement. Income statement. Duration is very important. In accounting, duration is very important. So we can say as what? For the year ended 31st December 2020. And well underlined. Now, in your trial balance, you'll be given what we call sales. So come up with a columnar or what we call vertical format. So come here with sales. What will be the sales? From your trial balance, get the sales. There's only one item that affects sales. What is that? Less sales returns. We less sales returns or return inwards. These are the sales that we had made to a client, but due to some other reasons, he has returned back to the entity or organization. Therefore, we shall come here with net sales. Less the cost of sales from our net sale cost of sales. Get the opening stock. Opening stock. From your trial balance, you'll be given the opening stock. Add purchases. Purchases is just that value of goods that we have bought for resale. Though that value of goods that we have bought and now we are reselling. Either you have added value and etc. So add purchases. If there is carriage inwards, add carriage inwards, very important. And suppose we have returned goods to our supplier, that's what we call purchases returns or return outwards, whereby we need to less return outwards. So we shall get what we call cost of sales, less it from the net sales. Therefore, we shall have what we call gross profit. To this gross profit, add other incomes. If you've been given in your trial balance, therefore check your trial balance, add other incomes, which can entail discount received, add it there. If you have rent received, add. So as we can come up with the gross profit plus other income. Now less the expenses. That the entity, the organization has incurred. Mr. Kamau has some expenses which you can get from your ledger account that you have prepared. It will be posted in the trial balance. Look at the debit side. Most of the expenses and assets are really debited in our trial balance. So what are some of these expenses? Discount allowed is an expense. Carriage outwards is an expense. Stationery. So the entity paid some money for stationery is an expense. Also, we are talking about electricity. So we have electricity is an expense. Either interest paid on loan, Mr. Kamau has taken loan, but not the loan in the value of the loan, but interest paid on loan. It affects our GP, therefore is an expense. So interest on what? Loan is an expense. Insurance is an expense. Bad debts is an expense. Bad debts is an expense. Bad debts written off is an expense. So look at your trial balance. Bad debts written off is an expense. Then calculate depreciation. Don't forget this one. Most of the students tend to forget depreciation of the assets, e.g., motor vehicle, and depreciation can be calculated basically using two methods, straight line method or reducing balance. So motor vehicle, furniture and fittings, equipment. But remember, land, it doesn't depreciate, rather it appreciates. Therefore, add the total expenses. Add the total expenses. Let me see that value of the expenses less from this value of gross profit plus other incomes. So we need to less. Therefore, we shall arrive at net profit. And if it is a negative, then it is a net loss, whereby this value will be taken to our balance sheet. Now, I have not factored in some of these adjustments because either an expense is accruing, owing, outstanding, and etc. If an expense is owing, outstanding, or accruing, kindly we add to that expense. If an expense has been prepaid, for instance, insurance, we have paid insurance for the year 2021, we need to less the prepaid. So from these expense, the item expense, we less the prepaid because it doesn't concern that accounting period. It's for the next accounting period. Therefore, if there is any prepaid, like insurance, can be less the prepaid, and don't forget to factor it at our balance sheet. If there is any accrual, outstanding, owing, we need to add. For example, we can say stationery was owing the month of December. That month of December wasn't really included. But now we are preparing for 1 year. We need to add a matter of what? The outstanding, the owing expense as it pertains to the stationery. After getting the net profit, now you can proceed to the balance sheet. But income statement of sole trader, there can be Mr. Kamau or any other person should be prepared in this format, which is a vertical format. Make sure the classification, my student, what I'm saying is classification and the items. What are those items that pertains cost of sales, items that we include in the expenses, and etc. and so on. So I hope that video, it will really help you in your revision and also preparing of the income statement of a sole trader. Thank you very much.